And welcome to The Bottom Line, where we try to unpack the main business and economic stories of the day. Today, we have finally got our hands on that figure everyone in the industry has been waiting for, the conclusive figure for Poland's GDP growth for 2024. While the forecast was 2.8%, we are actually looking at 2.9%, which is a positive surprise. We are now joined by Urszula Kryńska, an economist from PKO BP, a Polish bank, to provide us with her analysis of this figure and what this indicates for 2025. Hello, and thank you very much for joining us.
Thank you.
So, 2.9%, obviously significant growth in comparison to 0.1% in 2023. But nonetheless, Poland didn't break that 3% benchmark. What got in the way?
Yeah, you are right that 2.9 is not bad, especially if you look at the figures from other EU countries. But of course, our appetite at the beginning of last year was much higher. We expected GDP to grow by more than 3%, more than 3.5%. So the final result was a bit disappointing as compared with what we thought at the beginning of 2024. And the main source of this disappointment is also the main source of economic growth, because consumption that increased by more than 4.5% in the first half of the year. It stalled in the third quarter, and in the fourth quarter it probably increased by 2.5%, still much below a substantial increase in real wages in Poland, because in the first three quarters of 2024, real wages in the whole economy increased, not real incomes, not only wages, but also profits of private companies increased by more than 8%. And if you compare it with the 3.1% increase in consumption, it's a bit disappointing, of course.
Well, this brings me to my next question, because the growth of the Polish economy that was demonstrated in 2024 has been ascribed to consumer spending and public spending. But just focusing on consumer spending, at the same time, we hear that Poles are in saving mode. So how do we reconcile the two? How does that work?
Yeah, it works only if we have extremely strong increase in income. And if you look at wages in the national economy, it has been growing by more than 11% in real terms, even if you correct for the inflation in the first half of the year. In the second half of the year, the increase was a bit smaller, but still close to 10%, but below. It was at 8-9%. So with this substantial increase in income, you have space to both consume and save. And of course, saving rate increased. The latest data is for the third quarter, and the saving rate was at the level we have seen before the inflation and the pandemic. So I would say that the saving rate returned to normalcy. But it was extremely low in the period of high inflation.
And do you anticipate that consumer spending will contribute to as much GDP growth in 2025 in the same way as 2024? Because will wages grow at the same pace in 2025? Probably not.
No, the wages probably will decelerate, but still we will have quite a substantial increase in real wages when you look at it in the historical comparison. And we think that the savings were built up after this decline during the period of high inflation, and think that the propensity to save will be lower. And of course, in our baseline scenario, we expect that in the second half of this year, interest rate in Poland will go down. And with interest rates going down, real rates going down, we think that the propensity to save will be lower and the propensity to consume higher.
In that case, do you think that Poland's GDP outlook for 2025 remaining as positive as it is, because the government projects 3.9%, do you think there is a chance to actually break 4%?
There is, of course, chance, but in our baseline scenario, we have 3.5% GDP growth in 2025. But the structure of this GDP growth will be probably a bit better than in 2024, because we think that the consumption spending will, of course, be a massive engine of growth, but also we expect investment to accelerate, especially at the end of the year, in the second half of the year.
The IMF, you mentioned 3.5%. So the IMF report is also a little bit more refrained in its projections and mentions 3.5% GDP growth. Do you think that their skepticism stems from their concerns regarding the Polish government's deficit and perhaps their lack of clarity as to how to manage that deficit? What are your thoughts?
I don't think so. I guess that probably IMF is a bit is a bit conservative when it comes to investment forecast, and of course we also are quite conservative when it comes to investment growth, because we do not expect investment to grow by more than 10% this year, and with this massive inflow of funds that are to be utilized, 10% is still below 10% is still quite a conservative projection, and I believe that that's the same what IMF had in mind. I don't think that it was about the public sector stance, I guess.
Okay, so when you say 3.5, you mean PKO BP?
Yeah, PKO BP, yeah.
Okay.
We have the same forecast as the IMF, I guess.
Okay. So Poland really is doing quite well when you compare it to other European countries, especially Central and Eastern European countries. A lot of them are struggling. We just have a little graph here to give us a little bit of comparison. And I wanted to ask, especially from your point of view and your expertise, is it really useful to compare Poland and say that it is a rising star when we compare it to other countries that are really struggling? If you know what I mean, like, you know, Poland is doing well when you compare it to countries that are struggling. Is it better to assess Poland away from those struggling economies and look at it more objectively? How is Poland doing in the objective sense, if it's even possible to do that?
Yeah, I guess that this comparison helps us to look at the economy in the objective terms, because of course we are not a lonely island. We operate in a global economy, the same global economy as our neighbors and as other economies in our region. And comparing between the countries is quite important, just to show how well we are doing in the environment that is the same for everyone, because the recession in Germany is the same for everyone. It's the factor that is drag on economic growth in Poland, in Czech Republic, and in Slovakia, and in Hungary, of course, because it's our main trade partner. But I guess that we are coping better with that than other neighbors.
To what extent is the EU Recovery and Resilience Facility funds expected to jumpstart, or perhaps more realistically, simply contribute to Poland's economic growth this year?
It was well said. I think that it will contribute to economic growth. It will contribute to investment growth, but we will not. I believe that we will not have the investment boom that could be expected. So we think that investment, of course, will be supported by EU funds, and this growth of almost 9% this year will be the result of EU funds and, of course, of public spending. But it will not be a boom, for instance, comparable to what we've seen in 2023.
So no miracles expected?
No. That's hard work.
Hard work, absolutely. And the newly announced EU competitiveness compass, how does that fit in with Poland's plans for economic growth?
Oh, I guess that it touches the right points, because when we look at investment in Poland, the main field where investment is needed is energy transition, and I guess that the fact that in this document it is said that we have to try to find a way to connect being environmentally friendly with competitiveness, that's what we have to do in Poland, and that's what companies have started doing in Poland, because in Poland energy is not only not very green, but it's also quite expensive. So investing in energy transition is just a matter of the competitiveness, and I guess that what we expect this year and next year is that we expect companies to become more green and more efficient.
Poland's finance minister has emphasized the urgency and the importance of mobilizing Poland's capital markets, which are essentially in their infancy. And he also emphasizes the fact they're absolutely key to Poland's economic growth. How do you assess the forecast and the trajectory of developing this key aspect of an underdeveloped element of Poland's economy?
Yes, I guess that capital markets are not the most developed in Poland, but still we are growth champions. So I guess we have been growth champions for the last 10 years. So I guess that it has not been the factor that was drag on our growth, but probably with the scarcity of funds and huge investment needs, well-developed capital markets are quite important just to finance the investment needs of the economy, of course, when it comes to energy transition. Again, it's the main topic for the next 10 years, I guess.
But how do you see the trajectory of that path for Poland? Do you see it in a positive light, or do you think that this is something that will be a constant struggle?
I'm maybe cautiously optimistic.
Cautiously optimistic, okay. We have this 3 to 4% GDP growth forecast for this year for Poland. And I wanted to ask you, if we were perhaps to reverse the situation, what would have to happen for the Polish economy for that ceiling not to be met? And I'm sort of thinking a little bit about, Trump 2.0, the current geopolitical situation and the various tensions that are currently on the rise. What would have to happen for that let's say 4%, let's be optimistic, for that not to happen?
You're right that there are many risk factors in the external environment, and one of these factors is of course Donald Trump's politics and the threat of trade war between EU and US. But what is important is that probably Poland is not very exposed to demand from the United States, because only 3% of Polish exports go to United States. But of course, Germany are quite prone to what is happening in the United States, because United States are crucial trading partner for Germany. They export about 10% of their exports to the United States. So I guess that the main way that these geopolitical factors could affect Poland is through German recession. If the recession in Germany is prolonged, then probably it will be harder for Poland to grow.
Okay, thanks so much for your time and analysis.
Thank you.
And we were joined by Urszula Kryńska, an economist from PKO BP. Thanks so much for joining us today. I was your host, Marie Cato. Join us every weekday for Business Arena at 5 p.m. CET on TVP World. And for the latest in regional business, follow us on X and on tvpworld.com. And for more news and features, stay with us on TVP World. Goodbye.